We'll settle your tax debt for pennies on the dollar. I've heard those commercials and I know you have too. And that's why I'm doing this video. So you'll understand if you've tried to settle your debt with the IRS through an offer in compromise, why it was possibly rejected. Hello, Internet family. Before I get started, if you don't already know, my name is Timlin Bowens and I'm an enrolled agent licensed through the Internal Revenue Service. I'm also the owner of Bowens Tax and Bookkeeping Solutions, a virtual firm based out of Louisville, Kentucky that specializes in resolving tax issues. So we've all heard the commercial, like I just said, we'll settle your tax debt for pennies on the dollar. However, a lot of taxpayers don't actually qualify to make that sort of deal. And even when some taxpayers do, they haven't followed all of the necessary steps to make sure that the IRS actually accepts their offer. So in today's video, it's part one of a series that I'm going to do, why your offer in compromise was rejected. So the first reason that I want to deal with today on why your offer in compromise, also known as an OIC, was rejected by the IRS. The reason is the IRS believes that you can pay the debt in full before the statute of time expires. So if you don't know, the IRS has a certain amount of time to where they can collect on your tax obligation. So what they do when you make the offer, they see how much time they have left and how much of that debt they'll realistically be able to collect. So if your offer was rejected because they think that they can collect all of it, that means you failed to show them that you really can't pay it within that amount of time. But let me give you some tips on how to figure out if you can or not. First of all, you'll want to know what is on your record of account with the IRS. Now, if you don't know how to access this, you can talk with a tax professional. You would want to talk to either an EA, which is an enrolled agent, such as myself. You could have a CPA do it, or you could have a tax attorney. They can work with you to get your record of account from the IRS to see how much time the IRS has to collect on the debt. If it's an accumulation of debt over a certain amount of time, each tax period has a different time limit on it. So that's something you want to be aware of. Then you want to make sure that you have your budget. And in your budget, of course, you're going to have your cash inflow and outflow of everything. Now, let's be realistic. The IRS definition of broke is not your typical taxpayer's definition of broke. So before you look at the IRS standards, it's a good idea to go ahead and have your own personal budget written out. If you don't have one yet, that's okay. One worksheet that I like to recommend to people is one done by Mikkel James, also known as the Bougie Budgeter. If you don't know who she is already, I'll actually put a link to that. She has a free spreadsheet where you can figure out your budget, and I'll also link her Instagram tag in below because she's always sharing budget tips. So once you figure out what your budget is and how much money you have left over, if you see that you could actually make reasonable payments to the IRS, the next thing you want to do is look at the IRS Pre-qualifier. So what the IRS has done to kind of help you out to make sure that you actually qualify for an offer in compromise, they have a tool on the irs.gov website. And I'll also put a link to that down below because contrary to popular belief, the IRS does not want to ruin your life. They don't want to take the time to issue a lien or levy. So you want to make sure that you're being proactive in working with them. So once you use this tool, you'll be able to see some national standards that the IRS has on what they consider allowable expenses. Because if you're doing a lot of things for entertainment or luxury items, the IRS isn't going to allow that, and they're going to want their money first before you get to enjoy life. Also, if you have a lot of assets, so if you own a home, if you have a luxury car that you have a lot of equity in, if you have a pension plan or 401k, if you have those things and you're able to access the cash out of them, These also will disqualify you for an offer in compromise if you have a lot of equity in them. Because the way the IRS sees it, you could just sell that asset so you could give them their money. So, just as a recap, the reason that your offer in compromise may have been rejected is because the IRS believes they can reasonably collect the amount due within the allotted time they have to collect still. So, if you need help with getting your record of account, if you don't think that you can do this all on your own, please by all means reach out to me and my team at www.bowens, B-O-W-E-N-S, taxsolutions.com. If you need a few extra tips here and there on the way, also go to the website and download your free report today. It's the 7 secrets the IRS doesn't want you to know. Again, that's at www.bowens, B-O-W-E-N-S, taxsolutions.com. And don't forget, I want to let you in on the other reasons your offer in compromise may not have been accepted. So if you're on YouTube, be sure to like this video. If you're on Facebook, like the page so that you can stay updated when the next video comes out. Talk with you all soon.